Hello students. The last video concluded with difference between direct and indirect tax. I hope you all gone through the slide and try to understand it. If you have any doubt or query about terms and or difference, do ping me on my personal window with your reference. In this video, we will proceed with the core concept, that is GST. Students, GST came into existence from 1st July 2017. It is said to be biggest tax reform in tax structure and great paradigm in fiscal policy. When we see the meaning and nature of concept GST, we come to know that it is a multi-stage tax. Now, what exactly mean by multi-stage? Multi-stage is the tax levied on each stage of supply chain where there is value addition. Let's take an example of this. Suppose an individual purchase a yarn from a specific supplier to manufacture the shirt. Now then, the shirt will proceed for the next step, that is labeling and packaging. Now, at each stage, the GST has been levied. This is what the multi-stage tax. The another term is GST is comprehensive. That covers almost goods and services except alcoholic liquor under this GST. The next is what it is a destination based tax. That means final purchase is the place whose government collect the tax. Let's take an example. If we manufactured shirt at Gujarat and send it to MP for labeling, when the labeling has been completed, the complete consignment will be delivered to Kerala for the selling purpose. Now, Kerala is the state where the actual purchase activity has been done, and it is the state who can collect the GST. So, GST is said to be touted and biggest tax reform and will simplify the current taxation system. It is really difficult to understand with a one concept or with a one definition or at an early stage of meaning. But eventually you will get the exact idea about the GST. Now students, one thing that has to keep in mind, such reforms should be done only by authority. And this tax reform, that is GST, is levied under the power that conferred by Article 246A of the Constitution of India, which was introduced by Constitution Act 2016 with 101st Amendment. Along with this, Article 256 states that no tax shall be levied or collected except by the authority of law. What does exactly mean by this Article 256? It means the directions given under these two articles are the only authoritative to levy GST, and inhabitants of nation should follow only that norms which have addressed under these articles. Except this one or except these articles, if you get any information about the tax structure, about the slab rates of GST, that may not be the authentic one. Now let's take a look on taxes which was subsumed or replaced by GST. Guys, we can see that there are two levels of taxes which has been subsumed in GST. As we seen in a previous slide, the taxes that subsumed are at both central and state level. Now just look at this. We can see that at the central level taxes, that central excise duty, additional excise duty under Medicinal and Toleratories Preparation Act, service tax, additional custom duty, that is countervailing duty, special additional duty of custom, cesses and surcharges, insofar as they relate to supply of goods and services which are at central level are subsumed in GST. On the other hand, we can see the taxes at state level, that is VAT or sales tax, CST, that is central sales tax, which has been collected by the state, entertainment tax, octroi and entry tax, purchase tax, luxury tax, taxes on lottery, betting and gambling, state cesses and surcharges. All the taxes at state level are subsumed in GST. But the thing should be keep in mind that all goods and services are covered by GST except the alcoholic liquor. Now let's see the structure. So students, in previous slide we actually talked about the taxes which are subsumed in GST. Now hence the reframed structure is set at two levels, that is central level and state level, and their names are CGST and SGST. CGST, that is Central Goods and Service Tax. SGST, that is State Goods and Service Tax. The another part of structure is at integrated level, which covers the whole nation. Hence, it is also called as IGST, which is a combination of CGST and SGST. IGST means Integrated Goods and Service Tax. Here we can also see in the tax slab rates of GST. Guys, previously we actually find the various variations in the tax rate for the whole country. Like some tax rates are different for the Maharashtra, some tax rates are different for the Gujarat, Delhi, Kerala, Karnataka. Basically the reason behind that, what actually the distance and the transportation cost and transportation time needed for the transfer of consignment from one state to other state, it actually varies according to that. But when the GST has been reframed, the one thing which is most important in that, the tax slab rate for whole nation is same, where the state is at completely on a south part or southern part, or it is in a north part. So the tax slab rates are 0%, 5%, 12%, 18% and 28%. According to the nature of the particular product, the product will falls under these slab rates. This is not actually to be discussed here, because in next unit we are going to discuss it in a detail. Okay, now we'll go for the next one. Now CGST, SGST and IGST are the key concepts of the GST. Now let's see what exactly CGST do. CGST, that is Central Goods and Service Taxes. It is a central government, it covers or it collects by the central government on the supply of goods within the same state, that is the intra-state supply of goods and services, we can say. SGST, that is State Goods and Service Tax, the tax which collected by state government on intrastate supply of goods and services, that is the supply has been made within the state. The next is IGST, Integrated Goods and Service Tax, the tax which collected by central government on supply of goods and or services between two different states, like goods sold from Maharashtra to Delhi or goods sold from Karnataka to Punjab, etc. Such supply of goods or services also called interstate supply. So students, just keep in mind that two different names are there for the supply of goods. If the goods are going to be supplied within the same state, it will be known as intrastate. If the supply of goods done in two different states, it will be known as interstate supply. The concept has to be keep in mind forever when we are studying the GST, because in future when we are going for the numerical terms, we need this concepts very clear. We need this concept very clear, because the completely that numerical terms or the success of the numerical terms will depend on these terms. Fine. So just keep in mind what exactly mean by intrastate and interstate supply. Now we'll go through some new technology which are important, new terminology which are important to understand in GST. The first term is reverse charge. It means the liability to pay tax by recipient of supply of goods or services, or both, instead of supplier of such goods or services, or both. Now what exactly mean? This term we are going to study as one separate unit of our syllabus, but till then just keep in mind that reverse charge mechanism means the liability to pay tax by recipient of supply of goods and services, or both, instead of the actual supplier of that goods and services. I know that it is a little difficult to understand, but I'm sure if you heard this video one or two times, you will get the exact meaning for this. But if you do not get it, just leave it, because the chapter is different about reverse charge, and we are going to study as this term as a part of our syllabus in the manner of a unit, a separate unit. Okay. Now the next is what the input tax. Here I mention the conditions under the definition technically included under the section that is section 9 and subsection 3 and 4, whether it is from the IGST or SGST or UGST. Okay. But in a simple word, input tax is the tax which charged at the time of import or purchase activity, except composition levy. These are the technical terms. Eventually we are going to express all these terms in a descriptive manner, but till then just remember that input tax is what? The tax which is paid at the time of purchase by the supplier. The next term is input tax credit. Input tax credit is when an individual buy a product or service from a registered dealer, he pay tax on it, and the same will adjusted with the liability of tax. The next is output tax. In relation to taxable person, means the tax chargeable under this act on taxable supply of goods and services, or both, made by the person or by his agent, but excludes tax payable by him on reverse charge basis. In short, output tax is what? When a supplier sells some goods to the other party, at that time the person has to pay the tax. That is what the output tax. Output tax is what? Actually the tax liability levy on the particular supplier on sale of goods. Now we'll go for the next one. Next is what? The threshold limit. Threshold limit is what? It is the upper limit up to which the tax liability of registered supplier is exempted on his aggregate turnover. Definitely, from the very first unit, government never levied taxes on the production. So in that case, some limits are mentioned in according to the Article 246A and Article 256A to levy the GST on sale of goods. At the time, the limit has been mentioned, that is for the complete nation, for the whole India, the supplier whose aggregate turnover in financial year is under 20 lakhs. Like if your turnover is below 20 lakhs, you don't need to pay the taxes. You don't need to pay the GST to the government. But of course, if your products falls under that particular category. Okay. Now, though for the whole nation, the threshold limit is under the 20 lakhs, but except The northeast zone, that is some special states like Arunachal Pradesh, Assam, Himachal Pradesh, Manipur, Mizoram, Nagaland, Sikkim, Tripura, and Uttarakhand. Okay, so this is the northeast zone in our India. Now the people or the suppliers who are falls under the category of this GST, or they are fulfilling the criteria of registered GST suppliers if they are earning, or if they have the turnover in a financial year under 10 lakhs, they are exempted from the payment of this tax liability. Okay, now we'll go for the some important definition in GST. As we all know that the definitions are little easy to understand, so I just go through it. Try yourself to understand what actually I am talking to you, and if you don't get it, or if you have any kind of issues, just ping me on my personal window. Okay, now let's take the first one, that is taxable person. Taxable person means the person who carries business or profession, like who either registered or required to register. Excludes agriculturist employment services, employment services that the services has been given by employee to his employer. The person exclusively engaged in supply of goods and services not liable to tax. Now the next is what the person. For GST, an individual, HUF, company, partnership firm, association of person, body of individuals, corporate of state or central government, body corporate, incorporated under any law, cooperative society, local authority, central or state government society, trust, any artificial judicial person not falling under any of above, the everything will covers as a person, and the person who is liable to register or required to register is a taxable person. Okay, now in this definition, if you are not getting, or if you don't understand any kind of term, just feel free to ping me on my personal window. Let's continue with the new definition about the business. Business, which includes any trade, commerce, manufacture, profession, adventure, wager, or similar activity. Now along with that, some different or some allied definitions we have to need to understand. That is trade. Trade is wholesale and retailing. Production, that is process of converting inputs into outputs. Manufacturing, that is the process of emerges new distinct product from raw material. Goods, that is any movable property other than money and securities. The goods may be include that exported goods, imported goods, future goods, present goods, everything. Now export of goods means what? Goods when cross the limit of territory and enter in high sea is export of goods from India. Export of services, when services supplied to outside India and supplier of services is in India. Now import of goods is bringing the goods in India from outside the India, and import of services is services rendered from outside of India and recipient are in India. Let's continue with the new concept, that is recipient. Who is the recipient? The person or an individual who receives goods or services and liable to pay consideration on it. The services means anything other than goods, money, and securities. The supplier is the person who supplying demanded goods or services or both, and shall including agent acting as on behalf of supplier. Okay, students, one more thing which is most important to understand, that is as I said in earlier slides, to levy the GST there should be authoritative power. Okay, now here we can see the three different authorities who collect the revenue under the head GST. The first is CBDT. CBDT, that is the Central Board of Direct Tax. It is a part of Revenue Department under the Ministry of Finance. It has two twofold role. That is, it provides important idea and inputs for planning and policy with regard to direct tax in India. That is, what should be the tax slab rates has been designed or framed on income tax. Okay, this decision has been taken by CBDT. The next is, it assists the income tax department in the administration of direct taxes. Like, the person who is liable to pay the tax is actually paying his tax or not. It has been monitored by the CBDT, and at the same time, if the person is paid some TDS which are related with the income of the consumer, definitely at the time CBDT is there, who actually helps and monitor the all activities related to refund of the tax. The second is CBEC, Central Board of Excise and Customs, which deals with the policy formulation with regard to levy and collection of customs and central excise duties and service taxes. Students, let's see the difference between the custom and excise. Custom duties which levies on the goods which we are imported, that is, which we are received from the other countries in India. Excise is what? If the suppliers are supplying the goods and services within the nation, at that time we have to need to pay the excise duty on each and every supply of good. Okay. Now the next authority is CBIC, the Central Board of Indirect Taxes and Customs. After the GST implementation, the CBEC has been renamed as the CBIC. The main role of CBIC is assisting the government in policy making matters related to GST. Like this CBIC, this board is actually performing according to the Article 246A and Article 256. Now let's take advantages of GST. Composition for small businesses. This is the first very first advantage. Composition scheme for small businesses. It is a particular pattern of scheme where we can go for the consolidated, or we can say that we can say that we get some facilities from the authorities, revenue authorities, at the time of payment of tax. Okay. Again, we are having a very simple and easy unit to understand the composition of scheme as a term. Eliminating the cascading effect of tax. Cascading effect, that is tax on tax. Like in the very first two slides we were discussed about that the GST is a multi-stage tax. Okay. Now previously at the time of indirect taxes, we actually find that at every stage of value addition, everyone has to pay the taxes. Like if a manufacturer paying a tax on purchase, at the same time the manufacturer has to pay the taxes when it deliver or when it transfer the consignment to the labeling department. Okay. Now again, when a labeling department transfer their consignment to the packaging department, that time the labeling department has to pay the tax on the previous stage, that is when the manufacturer transferred that goods. Okay. Now the labeling department also paying the tax, or also liable to pay the tax when he is transferring that consignment towards the packaging department. So what does it mean? A person who is receiving the consignment and transferring the consignment has to pay the taxes on received entry and paying entry. Fine. This is actually what the cascading effect, because that time the person is paying the same tax for twice or thrice. Okay, so after the GST, such cascading effect has been eliminating from the transaction. It is very simple and easy online procedure, saving more money. That is, just because of minimizing the cascading effect in this tax structure. Definitely, whatever the final amount of that product is really reduced or minimizes the extra charges of the taxes. Unorganized sector is regulated under GST, which is previously not falls under the indirect taxes regime. Easier to do business. Reduction in logistic cost and time taken across state. Logistic cost is what? The transferring cost. Like previously, just due to that cascading effect, we have to pay more taxes on the octroi or more taxes on the carriage outward. Okay, such kind of taxes has been minimized or reduced, and even the time has been reduced for the logistics. Higher exemptions to new business, financial inclusions, increased revenue, easy tax filing and documentation, and increased GDP. Now, there are some disadvantages of GST also. GST increases the operational cost. Definitely, what actually the operation has been done in the all business activities, the cost has been increased. If you need any assistance to understand what exactly mean by the operational cost, just ping me on my personal window. Difficult to cope with online tax system. Some people are not habituated with the technological advancement. At that time, the people may face various issues at the time of filing of tax returns or the all kind of documentation for the GST registration. SME, that is small and medium scale enterprises, will have higher tax burden. Definitely, what if the small or medium scale enterprises producing such kind of products which may falls under the tax slab rate 18% on 28%, they may have to bear the higher tax burden. Negative impact of real estate market. Simply new name for VAT, excise duty and custom, as we all seen in previous slides, what the taxes has been subsumed. So what actually the VAT, excise duty and customs has done their role in a previous tax structure, the same role has been done by the GST with a different name. It cannot be completely eliminate black money and tax evasion. Though we are trying to do the what we can say, the purity for the economical activities, but still we cannot eliminate such kind of corruptions or such kind of parallel economy completely, as it has been habituated by each and everyone. Sorry, not exactly the each and everyone, but most of the people has been corrupted, has been done their activities in a corrupted manner. It's okay, it just part apart, just take apart. We'll conclude our this video with the facts about the GST. Like, it is a one nation one tax regime. It has been 17 years since GST was first conceptualized in India. About 160 countries in the world have GST, and India, after the Canada, is only second country in the world to adopt dual GST model. Dual GST model, that is the GST structure included or the GST structure framed with CGST and IGST, and CGST, SGST and IGST. Okay, so students, I hope you understand the concept. But if you have any problem, just feel free to ping me on my personal window. Till then, thank you.